What I have for you this week is an interesting case from India about whether or not HYATT International-SOUTHWESTASIA Ltd, a Dubai company, had a PE or not. What makes this case interesting is the fact that they look very deep into the question of whether you have control over a fixed place of business. So let us look at the decision. Here you can see it was from the High Court of Delhi, 22 December 2023, and it's an in-between decision. I'm not exactly sure how the Indian formal law works, but in any case, the issue of the PE was decided, so let's go further. If we look at the facts, HYATT International-SOUTHWESTASIA Ltd, hereafter the SCC, is tax resident of the UAE. On 4 September 2008, the SSC entered into two strategic oversight service agreements, SOSAs, with Asian Hotel Limited India, one for the Hyatt Regency in Delhi, and this is the hotel that you see in the background, hereafter the hotel owned by Asian Hotels Limited, and the other for a hotel located in Mumbai. Both SOSAs were similarly worded, so the court just decides on one. Under the SOSA, the SSC agreed to provide strategic planning services and know-how to ensure that the hotel is developed and operated as an efficient and high-quality international full-service hotel. So they were going to take care of all the strategic management. The SSC filed a return declaring nil income. According to the SSC, there was no specific article under the double tax agreement for taxing fees for technical services. It also had no fixed place of business in India. The presence of the SSC's employees in India did not exceed the specified 9 months under Article 5.2, and therefore the SSC did not have a permanent establishment. I assume that 5.2 is a service PE type of clause. The SSC explained that its receipts are not taxable as fees for technical services in all the SSC's employees stayed in India during a relevant period for 158 days. So I assume there is a second clause in the UAE, in the India Treaty, which says that you do have a surplus PE if you stay more than 183 days. The assessing officer held that the SSC was actually operating the hotels belonging to the owners in each and every manner, that there was continuous presence of the SSC through its employees throughout the year, that apart from operating the hotel, the SSC also provided its proprietary written knowledge, skill, experience, operational and management information, and associated technologies, etc., and its receipts constituted royalties under Article 12 of the tax agreement. So this is quite a strategic move, right? Because the assessing officer here says, you know, I'm not going to tax you on your net income for having a PE only. I'm also going to levy a royalty withholding tax on your gross income, where you don't even need a PE, right? Or actually, you can't even have one. And then on point 17, it says, according to the assessing officer, the SSC had a fixed place of business at its disposal throughout the year at the hotel, including the chambers of the managing director and other expatriates. The AO held that although the SSC had restricted the stay of its employees below the specified period, the premises were available to the SSC for the entire duration, and the SSC provided central reservation system services, creating a PE. It was irrelevant that the employees came and left during the period. Their activities under the SOSA continued throughout the year. The AO held that a part of the activities also qualified as fees to be treated as royalties. And I must say, I find the tax inspector's approach a clever one, right? It says it's fine that you count the number of days that your people were here, but that is not the real measure. The measure is how many days did they have this access available to them, and that was 365 days. So it's an interesting way of the tax inspector to circumvent the issue of the employees not being there more than 9 months or not being there more than 183 days. A 10-second commercial. If you want to learn more about international taxation or transfer pricing, or treat yourself to an all-round update, or if you want your team to learn or stay updated, please visit my online courses. So the court first deals with this question of were there royalties, yes or no, and the court basically decides no very quickly, right? The court says there is no dispute that the aforesaid question is required to be ascertained on a plain reading of the terms of the SOSA, the question of whether there were royalties, right? And the court says, well, we need to look at the contracts. We need to look at the plain wording of the contract. I like this. We don't very often see this in court decisions. The recitals of the SOSA indicate that the owner and HYATT entered into a sales and marketing and management service agreement for providing sales, marketing, and management services. The owner and HYATT also entered into certain trademark license agreements pursuant to which the owner was permitted to use the HYATT trademarks. It was further agreed that the provision of strategic plans, policies, processes, guidelines, and parameters would include recruiting, interviewing, and assistance in general hiring the general manager or hotel employees, and also include formulating and establishing overall human resource policy, establishing overall strategic purchasing policies with regard to selection of food, supplies, materials, including food, beverages, furnishings, and equipment, etc. Determining policies for the admittance of guests, use of hotel customary purposes, charges for hotel services, promotion and marketing of the hotel, sales and marketing services, and centralized reservation services. The SSC would also make available personnel for the purpose of reviewing plans and specifications for future alterations of the premises and advising with reference to design of replacement of furniture and equipment. And what I like about this is the court really looks at everything that the SSC does, right? And clearly the SSC runs the total hotel and every aspect of the hotel, and the court goes into detail, which I think is what a court should do. It is apparent from the above that the SSC was required to render services in an area of strategic planning, maintaining HYATT operating standards, and covering all aspects of the operation of the hotel. It is apparent from the plain reading of Article 3 and other provisions of the SOSA that the SSC had an overarching role in the management of the hotel, albeit at a policy level, right? And the court then concludes that this does not constitute royalties. The court goes on to say, the SSC also agreed to provide owner and employees of the hotel proprietary written knowledge, skills, experience, operational and management information, and associated technologies related to the operation of international luxury full-service hotels. This was described under Section 3 of Article 3 of SOSA as know-how. Now you can see why the inspector leans towards royalty here if you start using these kind of terms in contracts. The SSC would be entitled to fees, a strategic fee as well as an incentive fee as set out in the SOSA. It is clear that the fee is not a consideration for the use of or right to use any process or information of commercial or scientific experience. And this is where the court opens its attack on the arguments of the tax inspector. The fees payable is in consideration of providing the services as set out in SOSA and as highlighted above. And the court then continues, we are unable to accept the revenue's contention that the fees received by the SSC in terms of SOFA could be termed as consideration for the use or right to use any design, model, process, and also information concerning commercial and scientific experience. Indisputably, in terms of the SOSA, the SSC had agreed to provide services. However, such access is only incidental to the services agreed to be provided by the SSC. So there are no royalties. And the court concludes, merely because the extensive services rendered by the SSC in terms of the SOSA also included access to written knowledge, processes, and commercial information in furtherance of the services, this cannot lead to the conclusion that the fee received by the SSC was in the nature of royalty as defined under Article 12 of the DTA. So the tax inspector loses the argument on royalties. Let's see how he does on the PE. And the court goes on, and it first goes and says, at the outset, Mr. Ganesh, learned senior counsel appearing for the SSC, submitted that the tribunal had grossly erred in proceeding in saying that the SSC had complete control and discretion with respect to all aspects of operations of the hotel, and that allowing the owner a very minimal role. And this sounds strange, right? But then the court goes on to explain the said conclusion disregards and ignores the crucial fact that the owner had simultaneously, while entering into SOSA with the SSC, also entered into a hotel operations service agreement, hereafter the HOSA, with HYATT India Consultancy Limited, whereby HYATT India agreed to provide day-to-day management assistance and rendered technical assistance for the operation of the hotel. So this is an interesting point from the taxpayer, right? The SSC says, listen, we provided everything with regard to strategic management of the hotel, but we did not do the day-to-day management. And that is also why the SSC was able to have its personnel at the hotel for less than 183 days. And the court picks this up. It doesn't help the taxpayer, but the court does pick this up. And I think it's an interesting point made by the taxpayer. He submitted, this is Mr. Ganesh, that SOSA could not be read in isolation and was required to be read in conjunction with the HOSA, which makes total sense. In 71-72, the court now refers to the Supreme Court and its decision in the Formula One World Championship versus Commission of Income Tax, which was an interesting case about whether the Formula One World Championship Limited had a PE in India, even if they were only in India for the period that the Formula One motorcar race was in India, right? And the court then says, the Supreme Court explained that Article 5.1 PE entails two requirements. First, that there must be a business of an enterprise of a contracting state, obviously. Second, that the PE must be a fixed place of business, which is at the disposal of an enterprise. And then the crux sits in at the disposal of an enterprise. Further, the court explained that the PE must have three characteristics, being stability, productivity, and independence. The court held that one of the principal tests to determine whether an enterprise has a PE is to determine whether the fixed place of business is at the disposal of the enterprise. Now, how do you determine that? In a later decision in Assistant Director of Income Tax versus New Delhi eFunds IT Solutions, the Supreme Court had also explained that the place would be treated as at the disposal of an enterprise only when the enterprise has a right to use said place and exercises control over said place of the business. Now, this makes sense, but the court goes and provides more nuances about what this actually means. The court says, in Formula One, the Supreme Court referred to the text of Claus Vogel on double taxation conventions and accepted the proposition that a fixed place would be at the disposal of an enterprise if it controls the place of business to a considerable extent, not 100%, but to a considerable extent. It is not necessary that the enterprise has any legal right to exclude other persons from the said premises or holds any legal interest in the fixed place for it to be construed as at its disposal. It is sufficient that the enterprise exercises an effective degree of control over its business activity. The extent of control required for the fixed place of business to be construed as a PE depends on the business activity. And here the court and the Indian Supreme Court brings in a lot of nuance, and I like that. It is well accepted that an enterprise would be recognized as controlling a fixed place of business if it can use it at its discretion. In Formula One, the Supreme Court noted, and here comes the interesting stuff, a place of business will usually exist only where the taxpayer is free to use the place of business. 1, at any time of its own choice. 2, for work relating to more than one customer. An interesting point, we'll come back to that. And 3, for his internal administrative and bureaucratic work. And I'm not quite sure how relevant 3 is, but maybe it was more relevant in the context of Formula One, where there must have been a lot of administration. The Supreme Court then went on to say, in all, the taxpayer will usually be regarded as controlling the place of business only where he can employ it at its discretion. Generally, the less invasive the activities are, very interesting, and the more they allow parallel use of the same place of business by other persons, the lower are the requirements under the control test. There are, however, a number of traditional PEs which by their nature require an exclusive use of the place of business by only one taxpayer and or his personnel. And then the Supreme Court gives some examples. A small workshop of 10 to 12 square meters can hardly be used by more than one person. Makes sense, and that can be a fixed place of business. The same holds true for a room where the taxpayer runs a noisy machine. Very practical and down to earth, right? A place of business would not be constructed at the disposal of a person rendering services if it is made available to the said person only for the purpose to discharge his functions. So now we get back to this point, the second bullet on the left-hand side, the work relating to more than one customer, right? To illustrate the same, the Supreme Court went on. A chartered accountant may be provided space in the office of his client for the purpose of auditing the books of the accounts of the said client. Although the auditor may have unhindered access, the space at his client's office cannot be construed as his fixed place of business. And this is because the access to the space is limited for the purpose of providing services to that specific client. A chartered accountant can neither service his other clients from the said premises, nor use the same at his will to carry on any of his other activities. And I love the nuance that the Supreme Court brought in a Formula One case in defining when you have the place at your disposal. And back to our own case, the High Court decided the duration for which the fixed place of business is at the control of a chartered accountant may not be material. In Formula One, the Supreme Court accepted the finding that the appellant had full access through its personnel and could also dictate who could enter the areas reserved for it. Although the access was granted only for 2 weeks prior to the event, till 1 week after the event, that was the Formula One race, the court found the appellant had sufficient control to have a fixed place of business because that was the only time that it needed this fixed place of business. And if we now look at HYATT, the issue to be addressed is whether the SSE had sufficient control over the premises of the hotel. And the court says yes. The terms of the SOSA was 20 years, and this lent some permanency to the agreement, I would agree. The tribunal noted that it was agreed that if the owner desired to avail financial assistance to finance construction of the hotel and do some other things regarding finance, the owner was obliged to secure from any such lenders a non-disturbance and atonement agreement acceptable to the SSE. So no matter what the owner does, as long as the SSE runs the hotel, the SSE must be able to use the hotel undisturbedly, right? The tribunal concluded that the SOSA not only provided the SSE with unrestricted right to access the hotel premises, but also complete control over such premises. The SSE may be correct in its submission that it was not required to carry on day-to-day management of the hotel. And then we come back to this point that the lawyer of the SSE made, saying, we did not do the day-to-day management. But the court responds and says, however, it would be erroneous to accept that the agreements entered into by the SSE did not provide a pervasive control. There is no dispute that the day-to-day management of the hotel was required to be conducted in the manner and in terms of the policy and guidelines laid down by the SSE. The SSE had the discretion to send its employees at its will without concurrence of either HYATT India or the owner. This indicates that the SSE exercised control over the premises for its business. Thus, the condition that a fixed place was at the disposal of the SSE for carrying on its business was duly satisfied. There is also little doubt that the SSE had carried out its business activities through the hotel premises because that's where it did its work, right? And in point 92, the SSE is correct in its submission that there is no provision which entitles the SSE to carry on any activity or business in respect of any other hotel from the premises of the hotel. So now we come to the second bullet of Formula One again. However, there is no specific bar that prescribes the SSE's employees from making decisions or issuing policies in respect of management of other hotels while they were stationed or visiting the hotel premises. So the court says you're right in saying that the contract didn't allow you to work on other hotels, but it also didn't ban you from doing so. So apparently you could do it. And then the court concludes, we find no infirmity with the arbitral tribunal decision holding that the SSE had a PE in India. So it turns out that HYATT did have a PE in India. I love the detail that the court went into, but there are a couple of questions still raised, and I want to just highlight them for you to think about. The first one is, could HYATT's PE be a place of management? It's not really a relevant question, because once you've decided you've got a 5-1 PE, what kind of 5-1 PE it is doesn't really matter. But the tax inspector very specifically argued that HYATT also had a 5-2 PE, but he didn't say which of the examples under 5-2 were applicable. And I just think, you know, you don't very often come across case law on what exactly it means to have a place of management PE, but this might have been one of them. Right? The second issue is, how do you allocate the profits for the days the employees were not in India? And this is a TP question, right? It is all very fine to conclude that there is a PE because the premises were available for the UAE company during 365 days. But it would obviously be manifestly absurd if the employees were only there for 1 day, but you would allocate the profits to them for 365 days, because you need to work with significant people functions in India to allocate the profits. And if the people are not there, they are not there. You can't tax them for work that they do in the UAE as if that is work done in the Indian PE. It is not, because they were not there, right? You also need to think about things like allocation of risk, development of management policies. Surely HYATT International developed policies for several hotels in several countries. So how would you split that income? And you know, you can argue that the employees that came to India basically came to do the execution of the policies that were developed in the UAE. Now, the execution of the policies that were developed in the UAE is a cost plus affair. It is not a profit split affair. So that would have been an interesting question to discuss. And then finally, the court just notes that other Indian courts have said that if the company to which the PE belongs is loss-making, then the PE itself cannot be profit-making. Now, this is directly in contradiction of what the OECD says. And I'm glad that the court here also said, you know what, you need to treat the PE as a separate and independent enterprise, and the separate and independent enterprise, which the PE is, can be profit-making even if the rest of the organization is loss-making. I think that it's good that the court made that point clear also with regard to India. I hope you enjoyed the case, and I look forward to discussing another one with you next week. Bye for now.